Hello and welcome to Crux Investor. In a minute we're going to be speaking with Jason Simpson. He's the CEO of Orla Mining. They have a gold exploration play down in Mexico and a gold copper play down in Panama. So hello Jason, how are you? Lovely to meet you.
Good, thank you. Thank you for having me.
So just for everyone's benefit who's new to your story, which includes us, can you give us a 2-minute elevator pitch and sort of maybe talk about the 5 things that we need to know?
Let's start with myself. Jason Simpson, as you introduced me, I'm the Chief Executive Officer and President of Orla Mining. My background is I'm a mining engineer with over 20 years in the business, and most recently spent 6 years at Torex Gold, permitting, constructing, and ramping up their project in Mexico. And in that experience, I was also introduced to a few folks along the way, the likes of Chuck Jeunesse, George Albino, and Pierre Lassonde, who at the end of last year recruited me to move over to Orla and build a mining company. What I would like to offer your listeners or viewers to understand about Orla Mining is there are over 10 million ounces in 2 countries, Mexico and Panama. And we'll start in Mexico by building something called a Camino Rojo oxide project, which we will finance, permit, and begin construction next year. Surrounding those 10 million ounces is 215,000 hectares of exploration concessions to explore. So both countries, both Mexico, as I described, and Panama, have projects that are designed and will deliver very robust rates of return. Mm-hmm. Orla will start by developing the oxide portion of Camino Rojo project, as I mentioned, producing in 2021 with construction next year.
You're separating out an oxide project versus your sulfide project. That's kind of a sort of technical explanation. What does that mean in value terms? Why have you done it that way around? What's the strategy and thinking there?
Yeah, so 9.7 million ounces of gold resources that we have in Mexico are divided into 2 domains. One is what we describe as an oxide portion, and the second is a sulfide portion. We purchased the asset for an equity interest in our company from Goldcorp. And they studied and drilled over $100 million worth of drilling, in fact, of the project in Mexico. So they have a very large open pit design. Our interests in the short term are a bit more modest. We've designed a project that will essentially take the top off of the ore body oxide portion. And the benefit of that is we'll be able to utilize a simple heap leach pad to recover the gold ounces without a requirement to build a large mill, similar to what they have 50 kilometers away.
Oxidized gold ore is cheaper to process. That's
yeah, exactly. Heap leach open pits being one of the cheapest gold mining processes in the business.
Hence, I notice your AISC is exceedingly low, even for this part of the world.
Yeah, for the same reasons you've tried to describe. Open pit with a low stripping ratio, in our case less than 0.6 to 1, leads to low capital costs. There is no real construction. The mining equipment for our project will be contract mined. So that's what results in an cash cost below 500 and an all-in sustaining cost below 600. No tailings dams, no dams to raise, no large rock waste to move. All of that leads to the economics that we have.
Right, and you mentioned the Goldcorp spent $100 million. So was that entirely on drilling, or are you inheriting anything else from them?
No, so we've inherited a number of things in our acquisition of that asset. I'm not counting the original purchase cost of over $300 million for this deposit. Their interests at the time were a deposit that was of a similar shape and size to their Penasquito deposit, just some 50 kilometers north of us. As they studied it and drilled it over the years, they knew that it was a good deposit, but that it would come in a life cycle after Penasquito. And so on an NPV basis, it made sense for them to roll it out to a junior, Orla, and allow us to strip the oxide, so the top portion of it, which would expose the sulfide, and at a later date make a decision about whether they re-enter the project for the remaining sulfides.
What's the strategy here? You've got this oxidized ore. Is that generating value for shareholders now, or is that a case of using that money to finance the sulfide component of this project?
Yeah, at this point, we will continue to study our options with the sulfide portion of the project, but we have no plans to roll the money created from the oxides into that at this stage. The business is intended to produce cash, and we will do so through a combination of oxide assets, if that is the right formula, or potentially the addition of a sulfide asset. I think in the current sequence of our strategy, we would develop the oxide portion in Mexico,
Yeah.
whilst continuing to study the sulfide portion, but then likely shift to another oxide opportunity that we have in Panama, something that is slightly smaller, but delivers close to 80,000 ounces a year. Again, our interest as a business to produce cash in whatever gold style vehicle that is in.
Okay, and what's the? I mean, you've given us a little bit about your background. What's the relevant experience of the management team specifically, but I guess also from the board, who some big names in there, very supportive names in there.
Yeah, so let's start with the board of directors. I think that's a good place to start because it is a key distinction for a company our size. The term industry veterans would be an understatement. Our chairman is Chuck Jeunesse, a former Goldcorp CEO. We also have directors, the likes of which include George Albino, who's the chairman of Eldorado Gold, Tim Haldane, former Agnico mine builder, specifically heap leach, open pit, Mexican mines, in particular. Rich Hall, director for IM Gold, Jean Robitaille, the current senior vice president for technical services for Agnico, and Dave Stevens, the VP for corporate development at Goldcorp.
You got some really big names in there. Who's actually active? They're not just there as a sort of nameplate exercise. How do you interact with them?
Yeah, so obviously our job and my job as the leader of the management team is to execute on the strategy of Orla, which is to utilize our exploration resources to develop gold mines that produce cash. And what they do is offer world-class guidance and oversight to our management team. Each of the masters, generously contributes their expertise to Orla for the success of the shareholders, which include themselves. They are active. I speak on a constant basis with many of them, and of course their role is to provide oversight and guidance to us, and they've been generous in that support.
Right, I noticed a couple of the names, Pierre specifically, who put their money where their mouth is.
Pierre has a significant personal investment in Orla, which we appreciate, and he, different than the board, as a shareholder, does communicate with us often, and we appreciate his perspective, industry contacts, and frankly, a lot of the attention that Orla has generated is through cornerstone investments by guys like Pierre, his friend Seymour Schulich, but also 20% equity interest by now Newmont, and a 10% equity interest by Agnico. Tends to give confidence to other investors that industry professionals believe in this story.
But the Goldcorp component is sort of, it was their asset before. It's option money for them, and you talk about the potentially coming back in at the sulfide stage. Okay, Agnico, have they put cold hard cash in?
Agnico's interest is through the Panamanian asset, so they had a significant interest in Pershimco, which is the asset that we acquired in Panama. Just to finish up on your question, their cash interest and their infusion since the acquisition via Goldcorp and via the Panamanian asset has been to participate pro rata in all the subsequent financings. So in each of the subsequent financings, they've maintained their equity interest.
So let's come to some of the business fundamentals before we kind of get into drill down into the projects themselves. So you've got a market cap of circa 183 million today, Canadian. Year high $1.55, 102 today. So obviously you've come off a bit there. I know you're going to argue with me that's the market is responsible for that. Everyone does. But what's the plan for this year in terms of addressing that? I know you've done a few interviews and so forth, but there's got to be more to it. So what are you up to?
Yeah, so if we just back up a bit into 2018, our work in 2018 was to deliver the PEA for the Camino Rojo oxide portion of the project, which we did. Get the feasibility started, hire a couple of important people, operational leadership, enter me, financial leadership, and enter our CFO Etienne, and graduate to the TSX. Frankly, that alone doesn't help the share price. So we need to do some things this year that will reverse that trend. And some of the catalysts this year that investors can expect is we will have the feasibility on that same project delivered by mid-year. We'll need to submit for permits so that we're ready for construction, and we'll do that mid-year of this year. Obtaining construction financing. Keep in mind that the financing required for this project is quite modest at 125 million capital cost. So in a difficult market that you described, I think that's an important element. So completing those three will set us up for construction next year and gold production in 2021. And as we deliver on those business results, investors should be rewarded. But another real opportunity for the company and investors is if we are able to reach an agreement with our neighbors. Fresnillo is the neighbor. And we've studied what we call a layback agreement, the ability to bigger our open pit onto their property. And it could double the value of the Camino Rojo oxide portion of the project. So that catalyst alone will create a significant opportunity for investors.
So it'll double the value, which you hope will have a knock-on effect on the share price.
Yeah.
What's the timing and all of that? I mean, that you're in discussion with these guys?
So all of those things that I described, those four things are timed this year. We'll talk about different things for next year and what we need to achieve there. And to answer your question on where we are in the discussions with Fresnillo, they started prior to my arrival at Orla at the end of last year. Pierre and Chuck, who we mentioned, started the discussions. Those discussions continued upon my arrival. Fresnillo is a big mining company, as you know, and they have lots to do. But we've had some very good conversations with them, which have included us signing a CA with them, exchanging data. So both sides have had an opportunity now to assess that data and understand what's on each other's concession. And that should lead to a subsequent discussion of what a deal would look like. And I believe that in the material that I've seen, that there's an opportunity for both us and Fresnillo, and we'll work towards finding that agreement this year.
And so what are the options there in terms of like you come to some sort of agreement over, what each other's got, you mine it, they mine it, you mine it, they process. I mean, how does it all work?
Yeah, so in any agreement, it's important to understand what the interests of the other side are, and we've been able to have that discussion with Octavio at Fresnillo, and they've described to us quite clearly what they would be interested in. So it would be an Orla mining operation. And our ability to mine it, I think, is clear with our experience on the management team. So it would be our operation. They don't have enough resources on their side to create their own mining opportunities. So they'll be able to monetize the amount of resources they have on their concession through putting it on our heap leach. And so now we just need to discuss how much that's worth. And we've discussed all the different options we could have to share the benefit, everything from NSR to royalties and so on. And for Fresnillo, I think the solution will be in cash, not all upfront, likely a staged approach, similar to an agreement that they most recently made with Argonaut.
Right. Okay. So they would, whatever portion, however you split it, they put in cash according to that agreement. Okay, we've mentioned some pretty big names on the board. You think you'll find it easy to raise cash in this market? I mean, because the project, I think you're talking about as currently 7-year life of mine, just over a 3-year payback at about a 25 with a 25% IRR. So these are modest, but you'd look to build it out with the Fresnillo opportunity. I get that. So where's the capital come from? Do you think that's going to be cheap money, or is it a case of, needs must, and you'll take what the market gives you?
Yeah, and so that's one of the pieces of work that I mentioned we're doing this year. Etienne, our CFO, a 12-year Goldcorp veteran, is leading that for us. I also have some experience raising money for building mines in Mexico. At Torex, we raised $375 million as a 1/3 portion of the money we needed to build that $800 million project. So I'd say, the quantum that we need to raise is more modest than that. The market is not as good, and so what we'll do to raise that money will be a division of likely equity and debt, and a starting point for us will be 50% equity, 50% debt. And as I've already mentioned, an important piece of that puzzle is understanding who our lead orders would be. Some of our important equity investors, and we've mentioned Pierre has expressed an interest to participate on the debt side. So based upon my contacts and Etienne's and in the banking communities, private equity firms and others, I think that we'll be able to put a package together by the end of the year that is a mixture of that at a cost of capital that's reasonable for a company our size. We've had some recent examples in the marketplace of teams about our size building up financing packages. So I think the distinction for us is we have a portion of the commitment already spoken for, and we'll need to find the remainder this year.
And obviously you've done a PEA, and it's about optimizing, where you can go with this. That's the name of the game. But the other way of tackling this is, I guess, looking at what you've got and what you focus your time on. So you're focused on Mexico, and then maybe the oxide down in Panama, and then you come back for the sulfur. So you've kind of got a line of work or a line of sight of what you can tackle.
Yeah.
But you're doing smaller chunks. Is that a reflection because the way the market is at the moment, or how have you come up with that strategy?
I certainly believe that that the Orla strategy is a pragmatic one that is based upon what is possible in the current market. The current market, has some challenges, but also has some opportunities. The assets that we have came out of the current market. And so I think you've described it best in that we will take a sequential approach. That sequence starts with the prospective exploration ground you have. Having lots of good ground in a prospective area, 206,000 hectares in an area that already has 12 operating mines, to resources over 10 million ounces. I think that's a good place to start finding development projects. So yes, it'll start with the resources that are in the ground and the ones that we drill for and find. That creates a portfolio of development projects which will be lined up at this point sequentially based upon their rate of return and buildability. And to answer your question, would we do more than one at once in different market? Perhaps if there's capital availability to do so. But in the current market, our ambitions are to do them sequentially, one after the other, get into a cash producing position, and continue to create cash producing mines. That it's just that simple.
Right. Okay. Yeah. Obviously, different people have different strategies. If you look at people like Equinox, they've slightly a different approach, but I understand where you're going. It's safer, it's more pragmatic. Just dealing with Mexico, it's traditionally been a fantastic place for mining companies to operate. Recent, so we're not necessarily recent anymore, but change of government. Tell us a little bit about mining in Mexico. You've been there a while. You've done it with some pretty big operations there.
I started in January of 2013, and lots changed over the years since. But I obviously still believe, hence joined a mining company that's first project is also in Mexico. Consistent with what you said, Mexico is a good place to build and operate mines. That remains the case. Yes, governments change, and yes, one has here. I had a head start at Torex to get an understanding of the new administration and those leading it, and and everything that I've seen, heard, both at my time at Torex and subsequently at Orla, are that the new administration would like to govern in a way that creates benefit for the ordinary Mexican, and I know that resource developments can do that, and I believe the government would understand that as well. And so in doing our business, we can help the new administration do theirs. On various occasions, the new administration has outlined ways that they would like to partner with the mining industry to create those opportunities, often in remote areas in Mexico. But they've been clear that they will only do so in ways that are responsible to those that own the land, the ejidos, and the environment. And so mining companies need to behave in that fashion, and you can certainly expect that from Orla.
Right. Okay. Yeah. Well, I think that's fair comment. Working closely with government, like local and national level, very important as always. You've explained 2018 to us. You've also outlined a few of the deliverables for 2019. So, just talking about value creation for shareholders. Okay, I keep coming back to that because ultimately that's what investors want to understand. So, can you tell me why investors should get excited about this project? I get your pragmatic and diligent approach to how this project should be tackled. The share price has done what it's done. It's done it for lots of people, but how are you going to fix that? What are the things that people should go away thinking when they think of Orla Mining?
Sure. So I think, what I would leave you with is the value creation story has just begun at Orla. Investors that are looking for an early entry point should be looking at Orla. We will, as I've stated, create value through our exploration resources that feed a sequence of developments that result in a portfolio of cash producing assets. To do that, you need prospective ground. You need development capability. I and other members of the management team bring that. And you need operating knowledge. So Orla's board, the management team, and our key shareholders who I've spoken about provide that. And that's what will generate value at Orla in a much different sort of level than it currently resides.
What do you mean when you say that in terms of they will do what it takes to create value for shareholders? I mean, what are the things that you're going to say to the market which is going to get people excited about the portfolio, the prospecting, etc.?
The contacts, the knowledge of the assets around the world that the board of directors has, some of the key members of the management team have, will create that starting place of ground that delivers these things. And then the good geological ground can only bring you so far. Then you need to have people have expertise in turning that interesting geological prospect into a cash producing asset. So when you bring those different pieces of turf together with people that can develop them, and then supported by shareholders, and frankly to a certain extent board members who are willing to put their own money into developing and creating that.
Well, I know Pierre's bought previously at 144 and 177, so he's underwater here. He needs this to work, and I'm sure, as you say, can continue to support this. But it's a case of what are those decision points for you in terms of talking to the market and delivering to the market this vision of what the future of the business looks like. I mean, where do you end up? What is the company that you're going to be like?
Yeah, so the focus of the business is, as I tried to describe, produce benefit for stakeholders. Most often, that benefit is a monetary measurement. So for shareholders, it would be measured by the share price, by governments, their tax income, by employees, their pay, and by communities, the economic contribution to their way of life. And so what I would tell people going forward is that we have provided benefit at all those levels in doing what we do. Our business is measured monetarily, so we need to produce cash. The business that we happen to be in is gold mining. So the way that we can produce cash and all of those other benefits that I described that cash pays for is by building gold mines and operating gold mines. And so if you wish to increase the size of that benefit, wish to increase the spread of that benefit, you need to build and operate gold mines, and that's what we will do. And over time, what I'll describe in talks like this and to the shareholders is our success in executing on that, and the market will understand.
And you think, what do you think gold's going to do this year?
I think an answer you've often heard, and one I certainly agree with, is responsible mining companies need to be building mines in whatever commodity that understand the commodity cycle, and we'll build mines as we described earlier in the interview, a mine that has a cash cost well under half the gold price, so you can harvest a lot of cash from such a business. So those are the types of projects that we'll get started in and develop and operate. And so in a business that produces a lot of cash, the gold price tends to become less important. When you get into a business that the operating costs are much closer to the gold price, then you're really waiting on an ascending gold price and the leverage towards that. So I'll duck your question a little bit and say we'll only pick and build and operate gold mines that have a cash cost well below today's and even lower gold prices.
No, that's not ducking the question at all. I think that's a great answer. I think that was a great introduction to your company. I think it's quite well valued at the moment, and you're obviously doing a lot this year. So delighted to introduce that to our viewers over here. Thank you for your time, Jason, and I hope to catch up with you very soon and sort of hear about some of these things that maybe mid-year that you're delivering.
Yeah, that sounds great.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.